Welcome back, guys, to another live breakdown. In this video, I'm going to be showing you guys how to use the Fibonacci retracement. This is one of the biggest indicators I use when trading, and I'm going to show you guys how to use it right now. Let me remove all these drawing tools. There we go. Perfect. So for this chart, we are looking at Euro AUD. When you guys are using the Fibonacci retracement, they are most accurate on the 4-hour chart and the daily chart sometimes. I honestly use it on the 4-hour chart most of the time, but it's right here on the left. You go to this little icon, Fib retracement, and when we're using this tool, I'm going to just put it up right now so you guys can see, but there are levels on this tool, and what they basically do are monitor. They tell us the levels in the market that have the most retracement in them. So what we do is when we're using this tool, we get right here, we find our range that we're in. I'm going to go from the past, we go swing high, and then we go to swing low, the bottom support. Line it up just like that. And you can see when we're using this tool, we're looking at this level mainly, the 0.628, and we're also looking at the 0.5. That's the 50% zone. So right between these zones, let me mark it up for you guys. But all throughout these zones right here is where there's the most retracement in the market. And let's go back in the past and see what kind of happened throughout the zone. Boom. So you guys can see there is a lot of retracement right throughout this zone right here in the past and in the future as well. We see that this could be a big retraceable zone while using this tool. But as we're setting up in the past, you guys can see the market came down, absolutely smashed to these levels, hit support, kind of formed a W pattern. And when I actually started forming that W pattern, you guys can see right here that this candle, this bullish candle came up. It hit our 628 level right there, and then look at the candle after. That candle after, bink, was a complete drop. Came back down to previous support as it usually does. The market usually does what it did in the past before. So we have a hit support right there. After that, it completely rallies up again, and you can see that as we zoom into this candle, look at this candle right here. Do you guys see how it went up and it hit that zone again? And do you guys see this candle right here? It actually came up, hit the 628 level, closed a little below, and then the next candle that came out completely broke that zone right there. So that was a big zone of supply in the market. And you guys need to realize that when we are breaking support zones, resistance zones, supply, demand zones, trend lines, whatever it may be, the market needs a lot. As you can see, we had a tremendous push to the upside. It broke past the 628 level, came back down to previous resistance levels right here. We're going to also mark this up. This is also what we are doing when we're doing this is we're marking up all these points that it hit in the past. So you guys can see when it hit this point in the past, look at what happened in the past. It kind of broke right there, but the candles were closing below. This one completely dropped, came down here, came back up to test it. Obviously didn't get as high as it did right here. And that was a big confirmation that told us that there's a big drop coming very soon when we saw that this zone right here in the market didn't get near as high as it did right here. And after that, the market completely free fell. So right here, we could see the same thing happen. Like I said, we are looking at the 4-hour chart. So this 4-hour candle could close like that. And then the next candle could maybe push the zone past it a little bit and then bink, completely drop down to the 628 level right here. So let's go to another chart and put the fibs on another chart and see how it looks. I want to show you guys actually how the Fibonacci's look when we're looking for a sell market, because with the buy market, the 100% level is on the top and then the 0% level is on the bottom, but we need to look for a sell market. So let's find a good setup with the sell. All right, perfect. This will work. So we grab our fibs again, swing low to swing high for a sell market. So we could see right here, this could be a retraceable zone right through here. So this could be a retraceable zone right here in this market. What we're going to do every time that we use this tool, we're going to mark it up right at these zones that really matter, that are very important, the 50% level and the 628 level. So right between those lines. So right between the zone right here, we're going to also mark it up in the past. Mark this up. Boom. So you guys can see in the past, look at all this consolidation throughout the zone right here. This is a very powerful level in the market. So what we're looking at right here, I'm going to show you guys how I would mark this up. Honest to God, this is probably what's going to happen in this market. What we could see is a sell market very soon. So what we could do is we could get our short position and we can mark it up. This is our entry. Bring this tool over here. That's our entry right there, right? Yep, there's our entry. And let's put our stop loss above the 50% level. I highly doubt that's going to retrace to those levels. And as you guys see, look at the moving averages. It's indicating a sell. We had the 20%. And look at the moving averages, guys. We actually had the 50% go over the 20% moving average, meaning that's going to be a sell. If you guys have seen my previous videos, those moving averages are something that I use a lot, and they really help the market. So we could see a retrace up to this level right here, but I would put a sell limit right at the 628 level. And obviously our take profits are going to be down at previous resistance, right down there. So we have a take profit about 82 pips, and then our stop loss is 27 pips. That is a really good risk to reward ratio right there. 27 pips is what we're risking, and this is a good trade that we are looking at. So we could put our entry, like I said, right at the 628 level. Have our entry right there. Stop loss 27 pips, take profit 82 pips. Big perfect setup. That's what I would do. Just looking at that while using the Fibonacci's. But if you guys have not already subscribed, please make sure you enjoyed this video. Obviously, if you did like this video, please like it. And if you guys are looking to take your Forex education to the next level, we actually are having a discount on our Forex course. It is in the description, the link to join. Use code FX1 and you will get $100 off. It might be $200 off, I don't know for sure. And also, if you want to take live trade alerts from me every single week, we do have our 7-day trial to our group chat where you can get trade alerts from me. And we also do weekly webinars as well where we go over the market and there's a ton of information. But guys, I'll see you on the next video.